Hi, in this video we will learn all about interest on drawings which is charged by the firm to the partner on drawings made out of profit. Before we begin, let's first understand the difference between drawings and withdrawal of capital. What is the difference between drawings and withdrawal of capital? Let's begin with the first difference. The amount taken for personal use. It's taken out of, in the case of drawings, the amount is taken for personal use out of profits. However, in the case of withdrawal of capital, the amount taken for personal use is out of capital. Second, in each case, to which account is the amount debited? In the case of drawings out of profit, the amount is debited to drawings account, and the journal entry passed if cash is withdrawn is drawings account debit to bank. In case of withdrawal of capital, the amount is debited to capital account. So the journal entry passed will be partner's capital account debit to bank account. Next, interest on drawings. Interest on drawings, if it's applicable, will be charged on this amount which is withdrawn out of profits for personal use. In the case of withdrawal of capital, this amount is ignored for the purpose of interest on drawings. When the partner withdraws from capital, this amount has nothing to do when we calculate the amount of interest on drawings. Next, interest on capital. Where drawings is made out of profits, the amount is ignored for the purpose of interest on capital. It has no relation to interest on capital. However, in the case of withdrawal out of capital, interest on capital is not allowed to the partner on such amount of capital which is withdrawn by the partner. So no interest on capital will be allowed on the capital which is withdrawn by the partner. So we just saw the difference between drawings which is out of profits and withdrawal of capital which is out of capital. Now the second thing which we need to see is the form of drawings. The partner may withdraw in cash or in kind, in forms of goods, etc. Remember that interest on drawings, if it's applicable, is to be charged on both drawings in cash as well as drawings in kind. So if he withdraws in the form of cash, or if he withdraws in the form of taking goods of the business home, interest on drawings, in case it's applicable, is to be charged on both of them. The rate of interest on drawings. Interest on drawings is charged at the rate which is specified in the agreement between the partners. So whatever has been agreed among the partners, the rate of IOD will be that rate. In the absence of information, interest on drawings is not to be charged. So if you recall, in the absence of partnership deed, the provisions of the Indian Partnership Act of 1932 applies, which says that interest on drawings is not to be charged on any partner. Next, what is the procedure for calculating the interest on drawings? Now the procedure depends on whether a single amount is withdrawn, only one amount is withdrawn by the partner in the entire year, or whether multiple amounts are withdrawn. It is very easy to calculate the interest on drawings if only one amount is withdrawn, and the formulae for doing so is take the amount of the drawings, multiply into the rate of the IOD divided by 100 into the number of months from the date on which the drawing is made to the end of the accounting period. That many months divided by 12. Now, if multiple amounts are withdrawn by the same partner throughout the year, the procedure here again to calculate the interest on drawings depends on whether unequal amounts are drawn at irregular intervals or uniform amounts are drawn at regular intervals. To give you an example, when I say unequal amounts are drawn at irregular intervals, so unequal amounts mean probably first time 1000 is withdrawn, second time 3000, third time 5000, and so on. And the interval also is irregular. That is, first withdrawal will be on 1st April, then probably 1st June, then 1st July, and so on. So the interval between each two withdrawal will not be uniform. So in that case, we do use the product method. I'll come back to the product method. Now the second case is when uniform amounts are drawn at regular intervals. Let's say the partner withdraws 1000 at the beginning of every month, or let's say he withdraws 2000 at the end of every quarter, or probably 1000 at the middle of every month. So the interval is regular and the same amount is withdrawn every time. So in such a case, we use the average period method. Now going back to the product method, which is used when unequal amounts are drawn at irregular intervals. We need to prepare a table to find out the interest on drawings. We need to prepare a table with 4 columns. The first column showing the date of the drawing. The second column showing the amount of this drawing. The third column will show the number of months from date on which that particular drawing is made to the end of the accounting period. And finally, the final column or the product column is the second column into the third column. Then we find out the sum of the product column. And to find out the interest on drawings, we use the formulae sum of the product, that is the total of the fourth column which we found out, into the rate of IOD divided by 100 into a constant which is 1 divided by 12. So this product method is used when unequal amounts are drawn at irregular intervals. Now before we go on to the average period method, we'll do a few sums where only one amount is withdrawn by the partner in a year, and also a few sums in which we have to use the product method. The amount which is withdrawn is unequal and the interval is also irregular. It's not uniform. So in the upcoming video, we will be doing a few sums on these two concepts.